You've seen the posts, the luxury cars, first-class flights, and five-figure watches. For a while, you might have believed that's what wealth looks like. But the people who actually make up the top 1%, the ones with real, lasting money, play a very different game. And they play it quietly. They don't measure wealth in what's spent. They measure it in what's owned. And the rules they follow? They're often the exact opposite of what most people assume. There are 5 patterns that show up over and over in how the wealthiest people think about money. Let's walk through them. Secret 1. They don't buy luxury. They buy leverage. From the outside, it looks like they're living large, but when you look under the hood, the habits tell a different story. Most millionaires don't drive brand new cars. Not because they can't, but because they know the second a car leaves the lot, it loses value. They're not interested in the flex. They're interested in the math. They look at lifetime cost, not monthly payments. Fuel efficiency, repairs, insurance, resale value. Those factors matter more than the logo on the steering wheel. They know that every dollar spent on image is one less dollar compounding in the background. And here's what's even more surprising. Many high earners, even those bringing in 6 figures, live paycheck to paycheck. Not because they don't make enough, but because lifestyle creep devours their progress. The upgrades, the subscriptions, the subtle pressure to keep up. It adds up fast. Wealth isn't loud. It's savings that don't get posted. Investments that grow quietly. And liquidity that acts as a safety net when things go sideways. The top 1% aren't trying to win the status game. They're trying to win the time game. And time compounds just like money does. Secret 2. They earn money while they sleep. Here's one of the clearest differences between the average person and the wealthy. The average person works for their money. The wealthy set things up so money works for them. On average, over half their income doesn't come from labor. It comes from systems, dividends, real estate, equity, royalties. The remaining portion? It's earned, then reinvested. This creates a flywheel. Earn, invest, repeat. And the engine never really stops. Contrast that with the paycheck loop most people are in. Money comes in, money goes out. Groceries, bills, subscriptions, impulse buys. Then the cycle resets. The wealthy flip that script. They carve out a portion, even 25%, and push it toward growth. That could mean stocks, business equity, rental properties, or high-leverage skills. But the goal is always the same, to turn capital into cash flow. And timing matters more than amount. Someone who starts investing small in their 20s will often outpace someone who invests more, but later. That's the power of compounding. It's not linear. It's exponential. Ownership is the foundation. The more you own, the less you depend. Businesses, assets, intellectual property. These don't just build income. They build freedom. The top 1% don't rely on one paycheck. They build portfolios that pay them, whether they're working or not. Secret 3. They stick to the boring stuff. This one catches people off guard. We're told that winning with money means spotting the next big thing. Crypto, meme stocks, AI startups. But the top 1%? They're buying what most people scroll past. Legacy companies with durable demand. Index funds that track the entire market. Dividend payers that send checks month after month. They aren't chasing excitement. They're stacking predictability. Because here's the truth. The markets reward patience more than brilliance. People who chase the hot hand often underperform. Not a little, a lot. The wealthy have learned that being consistent beats being clever. They build 3-fund portfolios. They reinvest dividends automatically. They buy companies they actually understand. It's not sexy, but it works. Here's what this looks like in practice. They don't react to news cycles. They don't sell in a panic. They know volatility is the price of admission, and they accept it. Because they're playing the long game. They're not trying to be Warren Buffett. They're trying to build systems that survive market dips, policy shifts, and economic cycles. They want their portfolio to outlast them, not just outperform this year. And when everyone else is panicking, they're buying more. Because they don't need permission to invest. They already know their plan. They've already committed to it. The pattern behind it all. Here's the thread that ties it all together. The wealthy think in decades, not days. They don't need to look rich. They're building quiet stability that gets stronger with time. And that strength isn't found in flashy purchases. It's found in boring systems, disciplined decisions, and financial clarity. They remove emotion from the process. They automate contributions. They track net worth like a business tracks revenue. Most people try to manage their money through willpower. The top 1% build systems so they don't have to. That's the difference. And that's the playbook. Want to apply this? You don't need to make $1 million to start thinking like a millionaire. You need a system. A repeatable, calm, low-drama approach to money. Start with this. Save and invest a fixed percentage before you spend. Own things that grow or pay you. Avoid financial FOMO. Be boring on purpose. If you can do those things consistently, you're already moving differently. And if you keep going, time does the rest. The truth is, the top 1% don't have a secret club. They just stopped playing the short game. Now it's your move. Secret number 4. Automation greater than willpower. If there's one thing the wealthy have figured out, it's this. Systems beat discipline. Most people think the top 1% get ahead because they know more. They don't. They just build better systems, and then get out of their own way. Their financial lives run on autopilot. And that's not accidental. It's by design. Each month, money flows automatically. Investments are funded. Emergency funds are topped off. Essentials and reward budgets are allocated. No manual transfers. No forgotten goals. No emotional tug-of-war about what to do next. Just consistent automatic progress. And that's the key. They've removed emotion from the equation. No second-guessing whether it's a good time to invest. No skipping a month because of impulse spending. No reacting to the headlines. The system runs, even when they don't feel like it. But it goes deeper than just auto-investing. They use tools most people overlook: dividend reinvestment plans, DRIPS, quietly compound returns. Roundup apps funnel spare change into savings. Auto transfers move money the moment a paycheck lands. All of this happens in the background. No friction, no fatigue. And that's the whole point. It's not about being more disciplined. It's about not needing discipline at all. Because willpower fades, systems don't. By automating key decisions, the top 1% free up something even more valuable than money: mental space. They can focus on growing their careers, launching new ventures, spending time on things that actually matter. They've designed a money system that doesn't depend on mood, memory, or motivation. And that system works, whether they're focused or not. Secret number 5. They think in decades, not days. The wealthy don't react. They respond. When markets crash, most people panic. They sell. They spiral. They scroll. But the 1%? They pause. They zoom out. It's not that they're fearless. It's that they've trained themselves to think long-term. Every decision ties back to a bigger vision. Not next month. Not even next year. We're talking 20, 30, 40 years out. They rebalance their portfolios once or twice a year. They ignore the daily noise. They view wealth like a marathon, not a sprint. This shift in mindset changes everything. When you think in decades, you stop chasing trends. You stop overreacting to volatility. You start making decisions that actually last. A 3% savings rate versus a 30% savings rate? Over 30 years, the gap can be millions. Not because one person picked better stocks, but because they played the right game. The 1% aren't obsessed with fast growth. They're obsessed with staying in the game long enough to let compounding do its work. And that creates a calm that's rare. While others stress over red charts, they stay grounded. They see dips as discounts. They buy when others panic. Not because they're contrarian, but because they're prepared. They've already built a plan, one that's based on history, not headlines. And because of that plan, they don't need reassurance. They just stay the course. They know wealth isn't about guessing right today. It's about stacking consistent decisions for decades. They don't waste money on things that won't matter in 5 years. They prioritize stability, not status. And when setbacks hit, as they always do, they don't crumble. They adjust. Because they've factored in uncertainty from the start. They don't expect a smooth ride. They just keep moving forward. They're not chasing quick riches. They're building something that lasts. That's the shift. From chasing dopamine to designing systems. From thinking like a sprinter to moving like a marathoner. And that's how the wealthy stay wealthy. The math that changes everything. Building wealth isn't about earning six figures. It's about what you do with what you already have. Because the truth is, most people don't need more income. They need a better system. A system that gives every dollar a job. That cuts out the chaos. That builds peace, not pressure. One of the simplest, most effective frameworks I've ever come across, the 25 to 15 to 50 to 10 rule. It flips the way most people approach money on its head. Let's break it down. 25%, growth. This is the money that works for you. Investments in stocks, index funds, real estate, skills, or businesses. Things that grow in value or generate cash flow over time. This is how you build passive income. Not overnight, but month after month. It might be a $100 transfer into your investment account, or a course that boosts your earning power, or a down payment on a cash-flowing rental. Whatever the form, the goal is simple. Turn earned income into owned assets. 15%, stability. This is your financial armor, a safety net that absorbs the shocks. Job loss, car repairs, medical bills, broken boilers. It's not invested. It's not locked up. It's sitting in a high-yield savings account, ready when life gets unpredictable. 3 to 6 months of expenses. Accessible. Stress-free. Because nothing derails wealth faster than a crisis with no cushion. Stability doesn't sound exciting, but it's the foundation the rest of your financial life is built on. 50%, essentials. The basics. Rent or mortgage, groceries, utilities, gas, insurance. But here's the catch. This isn't about lifestyle inflation. It's about clarity. That means no takeout 4 nights a week. No streaming services you forgot about. No gym membership you haven't used since February. This is where financial discipline meets awareness. It's not about deprivation. It's about defining what truly matters and cutting the rest. 10%, rewards. This is the part most people miss. It's guilt-free spending, and it's built into the plan. Vacations, hobbies, nice dinners, new experiences. This is the pressure valve. It keeps you from rebelling against your own goals. When reward is part of the system, you're less likely to sabotage progress. Because enjoyment doesn't have to mean overspending. It just has to be intentional. What makes this work? The reason this framework is so powerful, it's not just about percentages. It's about philosophy. You stop guessing, you stop hoping, and you start directing. Every dollar has a purpose, which means you're no longer reacting to your money, you're leading it. And the beauty of it? You don't need to start big. Start with what you have. Even if you're saving 5%, not 25%, that's fine. The power is in the consistency, not the perfection. As income grows, the framework grows with you. Raises don't disappear into lifestyle creep. They go into your systems. Bonuses become growth fuel, not impulse splurges. Windfalls become wealth, not weekends. This is how momentum is built. This is how wealth becomes a lifestyle, not just a dream. Adopting the 1% mindset. Wealth doesn't start with money. It starts with ownership, not of liabilities, of assets. The 1% live differently, not because they earn more, but because they manage better. Every dollar they earn has a reason to exist. If it doesn't build, protect, or create meaningful joy, it's gone. They build buffers. They automate decisions. They don't rely on willpower. They rely on rules. They filter spending through simple questions. Does this add long-term value? Will this still matter in 5 years? And when the answer is no, they move on. They avoid dopamine traps. They don't chase every new shiny thing. They build habits that scale with them. And most of all, they remember why they do it. Not to flex, not to impress, but to buy back time, to own their calendar, to live on their own terms. Money isn't the goal. Freedom is. You don't have to be born into this. Managing money like the top 1% doesn't require an inheritance. You don't need to win the lottery. You don't need to start the next billion-dollar app. You just need to understand how they think and what they avoid. They don't chase trends. They don't overspend. They don't guess. They automate. They protect the downside. They invest early and often. And they never stop learning. Use the 25 to 15 to 50 to 10 framework. Own assets, not liabilities. Focus on consistency, not hype. And stop trying to look wealthy. Start building something that quietly grows behind the scenes. For decades. If this changed the way you think about money, hit the like button. Leave a comment with your biggest takeaway. And if you're ready to take the next step, check out our full breakdown on how to make your first $10,000 the smart way. It's linked right above. See you in the next one.